Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Focus is on the central bank rate decisions. First, it was the Bank of Canada which cut rates, then ECB cut rates yesterday. There is a slow shift in narrative from higher for longer stance to the beginning of a rate cut cycle. But how long would it take for the next cut is something markets would want to anticipate. Morning, JK. The ECB rate cut as well was well discounted. What's your read on the future path of monetary policy?
Good morning, Swaraj. There's been a wave of central bank rate cuts that started this week. As you said, Canada cut rates, then ECB has followed, which was a foregone conclusion. And of course, the Danish central bank also cut rate by 0.25% overnight. So this move of ECB is more significant because it's one of the major, one of the G3 banks, which is closely followed, and in fact other European smaller banks actually follow the ECB, and ECB in turn also mostly takes cues from how the Fed policy moves, but this time they have actually taken the lead because their inflation came much closer to the target, and they have been talking about a rate cut for quite some time. There are varying opinions whether ECB should have moved in view of the fact that economy has been showing marked improvement, and also inflation in the latest report actually inched up. But it is look like a pre-committed move, and also some sort of political element that is been in this cut. But Lagarde lost no time in saying that the future rate path is, or the monetary policy path is not predetermined, and it will be a kind of data dependent. That is the key takeaway. And they're also sticking to the QT that will start at 7.5 billion euro from the month of July. So being a well discounted move, it did not have an impact on the euro. So in fact, euro has slightly inched up, but nothing significant so far. Now, if you want to look at another central bank, where you can be certain that there'll be no rate change, it is India. We are having the MPC meeting conclusion today, and Mr. Das will be announcing the policy at 10 a.m. today. Status quo policy is what is expected. Even with the given change the political scenario, even the central bank would be watching how things evolve in the coming months, and with even the Fed rate cut not being assured when it will happen, RBI will be keeping the policy at status quo for rate as well as on the stance. Their indications on the future growth and CPI will be watched. Last time they had given 7% growth rate for FY25, and also to 4.5% inflation rate. Now, rupee, of course, as we said, has been trading at a higher range of between 83.30 and 83.50. Good FI buying in dollars, prompted due to their large scale selling in the Indian stocks, has again pushed the rupee to 83.50 yesterday. But as one would expect, RBI was back in the market offering dollars, and their action ensured that the rupee did not weaken further. This stance of the central bank is likely to continue for some more time until we get some strong cues from the global dollar, or from the local policies, or even the budget that will be coming up in some time. Now, with the political event having been kind of discounted now, and sometime before market wants to assess the policies and reforms, focus now turns to the global cues for the rupee. Also, we have the non-farm payroll data today, where expectation is for 1,85,000 increase, and unemployment rate pegged back at 3.9%. But any deviation here, which is not ruled out, considering various indicators leading up to the non-farm payroll data, has been weaker. Then, interestingly, we will have a CPI data just before the FOMC meeting on Wednesday next, and CPI data expectation is showing 0.1% decrease in month-on-month, both on the headline and the core. So interest will surround on what the dot plot indicates. Unlikely they will stick to 3 rate cuts as was seen in December and April meetings, but whether they will stick to 2 or 1 is what the market will be interested to see. And also, I personally feel whether there would be, looking at the weakness in the economy, whether they would advance a rate cut to September, earlier than September, is something that can be a major trigger for the market. So all eyes on today's data, and also Wednesday meeting with RBI MPC meeting being a non-event. Thank you.
Thank you, JK. And the wave of rate cuts has begun, starting with the Bank of Canada, which cut its rates, then ECB, and even the Danish Central Bank. All of them cut their rates, and of course, the Danish Central Bank follows what the ECB does. And this time, ECB has taken the lead in rate cuts, unlike the past, where they have typically followed the Fed. But the ECB chief reiterated the need for data dependence for future monetary path. RBI's MPC outcome will be announced today, and it is expected to remain status quo. Their inflation and growth forecasts will be looked at very closely. Rupee continues to trade in a range with action by the PSU on both sides. And the data to look out for today would be the US non-farm payrolls. That's it from us today. Thanks for listening. Have a very good weekend, and we'll see you all on Monday for the latest in the financial markets.